world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. We're thrilled to welcome Pascal Bouvier to the show today. Pascal is a full-time venture capital investor and fintech practitioner. Before becoming a venture capitalist, Pascal founded and ran startups, worked for commercial and investment banks, and has been at one time or another a CFO, COO, CIO, the list goes on. Pascal is currently venture partner with Santander InnoVentures. Prior to that, he built the fintech venture arm of Route 66 Ventures into a top global fintech investor. Originally from France, Pascal holds an MBA from UVA's Darden School of Business and is a CFA charterholder. I'm also told Pascal is a big fan of Burgundy wines, a topic I may have to pick up with him offline. To anyone hoping to get into venture capital, check out Pascal's bio for what high energy, proactivity, and variety of experience looks like. You can follow Pascal on Twitter at Pascal Bouvier, PASCALBOUVIER. Check him out on LinkedIn and on his must-read fintech blog, finiculture.com, FINICULTURE. Today's conversation was a fascinating look at some of the high-level trends that are impacting fintech from one of the sharpest minds in fintech investing today. Pascal, welcome to Rebank.
Thank you very much. It's very gracious of you to extend the invitation, and I'm glad that we're going to spend more than a few minutes together doing some good Q&A.
Thank you. Well, I appreciate you coming on. You've spent decades across entrepreneurship, management, and investments. What gets you out of bed in the morning?
I have a very curious mind. I'm inquisitive. Even though, one could say that I'm in a certain way, a misanthrope, I also love to discover and love to figure out how people think, how they act, what makes them tick within the constraints of, business on a day-to-day basis, whether it's tactical, strategic, whether it's operational or more, leadership driven. So really the inquisitiveness and learning, I started learning banking and commercial banking a long time ago, and nuts and bolts lending, to investment on balance sheet, to working with startups and technology businesses, to investing in said businesses. And every morning is a new day, right? You're going to have several conversations with entrepreneurs. You're going to have several conversations with consultants, systems integrators, lawyers, peer investors. You never know what you're going to discover next, how it's going to enrich you, how you are going to react to it, and how you are going to give back in the daily life of your business. And so that is a great motivator. It's an endless quest to expand yourself. And after all these years, I've come to the point that if there's one thing I really don't like is experts. I don't like dry theoretical academia, but I very much thrive with apprenticeship, craftsmanship, and learning as a practitioner on a daily basis. So that's what makes me tick.
You operate very much on the cutting edge of fintech investing. Where are we in the temporal arc of the fintech investment thesis? How long will fintech be interesting to entrepreneurs and investors?
Well, I have two answers to that. An answer that I've given pre-Trump winning the presidential election, and an answer that I give post. And I think that both are valid. They have different narrative arcs. So the first one is, I believe that we are in the third wave of a fintech deployment and a fintech narrative that is going to take another, 12 to 15 years, whereby the first wave was very much direct-to-consumer businesses that were started by entrepreneurs with lofty views and ideals of disrupting a bank or disrupting the insurance companies, an insurance company, much like their predecessors had done in other industries than the financial services industry. That first wave ended with somewhat of a disappointment. Not many startups reach escape velocity or reach, the expectations that were put in them. And there was a general pivot towards a second wave, which I'll dub a pivot to B2B or B2C models, right? So all of a sudden, partnering was and is the name of the game. Banks, insurance companies, other types of incumbents within the industry were best friends or supposed to be best friends with the startups, and all was well. We're in a certain way almost at the end of this second wave. There certainly has been collaboration. There certainly has been some hits and some successes, but not to the extent that probably people were expecting. And so we're starting this third wave, and we're smacking this third wave, which I dub TechFin, where there is 4 to 6 enabling technologies that are going to be put to bear to the business/technology stack of various incumbents and ecosystems, basically the 5 large ecosystems within the industry, i.e. Capital markets, asset management, lending, payments, and insurance, in a much deeper and broader way than the accepted understanding of what digitization is, which so far has been predominantly around front-end workflows and processes, anything that has to do with onboarding, underwriting, distribution channels, and so on and so forth. And so that TechFin wave is going to customize and tailor various enabling technologies, such as obviously blockchain. There's a lot of hype behind blockchain, but AI now, IoT, advanced data analytics, which is somewhat different than the AI, AR, VR, as well as quantum computing in a couple of years, to middleware/middle office workflows and processes, and back-end/back office workflows and processes. In a certain way, the analogy is, in as much as the first wave was about let's disrupt the incumbents, i.e. a bank, an asset manager, or an insurance company, the third wave, the TechFin, is going to be about let's disrupt or try to disrupt the incumbent service providers, right? All of the vendors to the financial services industry that have developed different types of technologies that are selling, that are in market, and that may not have kept up to pace with the advances of technology, and that may be disrupted by new entrants, new startups that are coming up with new paradigms. So I think that's a main theme that's going to run for a certain number of years. We've seen over the past year this play out in the blockchain space. First Bitcoin, then blockchain, without necessarily Bitcoin. We've seen it more recently over the past, I would say, 6 to 8 months with anything that has to do with AI and chatbots, or AI and various types of other mediums for insurance companies and for banks. And I suspect that we're going to see that with other enabling technologies. In the background, everything that is happening with the Internet of Things is also another example of that. Now, there's also been some changes on the regulatory front. Obviously, you have the FCA and its forward-thinking leadership that has come up with a regulatory sandbox, that has come up with different ways of engaging with the technology and startup ecosystem and innovation, and that has created a wave of sandbox across the world, predominantly with a lot of Commonwealth countries as well as Asian and Southeast Asian countries. It hasn't happened in continental Europe yet, or in the States, but it's only a matter of time. And then obviously with that has come, RegTech as a subset of Fintech, which is very, very important. Which leads me to my second answer, which is a post-Trump election answer. And that, that very much has to do with what are macro events going to do to the financial services industry. If we are past peak financialization, and financial services are going to be much more grounded into, hard facts of economic reality, which I think is a very good thing for all. Are we going to have a continued harmonization of financial regulation, as we've started seeing, for example, UK and EU, or through the Basel Accords, Basel 1, 2, 3, and the various applications outside of Basel, i.e. Dodd-Frank? Or are we going to see a lack of harmonization driven by potential trade wars, driven by a little more protectionism? And what is that going to do with international trade flows? How these are financed, as well as the national economies, and how the financial services is geared towards propping up national economies. The financial services industry is worth anywhere between 16 and 17% of world GDP. That's 16 to 17 trillion of dollars, give or take, depending on growth rates from one year to another. And that's a lot of value add to re-engineer along a business/technology stack, right? Even though we've had exuberance that has culminated in banner 2, 3, 4 years in succession for fintech investments, and that's not sustainable, there is still much to do. And I expect that it will play out over a long period of time at a more reasonable clip. Further, even though fintech investments might be a tad more tepid, relatively speaking, right, not in absolute terms, in either the US or Europe, just look at what is happening in Southeast Asia, in India, in China, where there's literally an explosion through either demonetization, regulators that have a different approach, investments that are made to create brand new ecosystems for mass affluent classes that are being created as we speak. I don't expect that to stop at all in country, and so in the aggregate, fintech investments will be quite healthy, if only in Asia, for a few number of years.
You're US based, but you work around the world. You mentioned the point around regulation and some of the developments that we've seen in the UK, Commonwealth countries, and parts of Asia. But in the US, the regulators have been slow to open up to fintech. Is regulation an issue for fintech in the US?
I wouldn't say it's an issue. I would say that there's definitely, it is in the DNA of the U.S. ecosystem to have a completely different approach. And as regulators think about how they engage with, one, their wards, two, technology and innovators and the entire fintech ecosystem, what new models are they going to adopt in order to, change themselves? And here I would say, you have a lot of fantastically gifted and intelligent regulators across many agencies in the U.S. And the many is, to me, the issue, in as much as if there is not one regulator like in the UK, right, and that's not an option because of the cultural landscape, then you have to have coordination and interoperability between agencies, between regulators, to have a more holistic approach to regulation, as opposed to having a siloed approach to regulation, i.e. the bank regulator, the insurance regulator, the securities and exchange regulator, and so on and so forth. And I think that there are premises towards that coordination, interagency speaking, by the sheer fact that they're dealing and will be dealing more and more, in my personal opinion, with issues that are global in nature. Or if they're not global, they cut across various skill sets as well as various subject matters, right? The unbundling, rebundling, and rethinking of bank paradigms, for example, make it so that you're going to have a pluridisciplinary approach to regulation to make sure that new models that emerge are properly regulated without any gaps or without any overlaps. And so that's where I see and I hope that U.S. regulators move towards. Having said that, the UK regulator is very pragmatic, is very A/B, testing driven, the commonsensical approach and the testing, on the ground, which lends itself to being principles based. You have a smaller set of rules, but you have a large body of principles that make you more flexible as a regulator. And we've seen in other jurisdictions, and maybe in the US that has been the case, an expansion of rules to the detriment of principles, right? So what 50 or 100 years ago would take 15 pages to write up for like a new statute for financial regulation would now take like 1,500 pages, and it's all rules. And so to the extent that we're moving back towards more principles, more nudging, less fiat and less rules, I think that that will be very much of a positive for the industry overall in the U.S.
It's interesting, having lived in Italy and therefore spent time in a civil law country. It's interesting to think about the similarities between the U.S. kind of prescriptive rules-based approach and almost a civil law environment as opposed to the common law legal structure, which would certainly seem more reflective of the principles-based FCA approach that you referenced.
And it is a paradox, right? Because that dichotomy that you point towards, which is really within the legal industry, right, and the different types of legal approaches, is very evident, right? The U.S. law system is very much defined from a common law perspective in terms of we are expanding the realms of what's possible through a healthy interaction between the private sector and the law and the courts, right? Whereas if you deal with any country that is civic code based, i.e. France or Italy, you define very, very precisely a framework within which you are able to operate. But moving that framework is much more difficult as an interaction between the private sector and the courts. And you would think that common law approach, i.e. principles and testing, would be something that would come more naturally to U.S. regulators. But I think that there's movement back towards that, which is a very positive as far as I'm concerned.
So the OCC, for instance, recently announced a fintech bank charter, which is heralded by some as a positive step, while others have kind of identified the OCC as an opponent to fintech innovation. What's your view on the relevance and the importance, potentially longer term, of that fintech bank charter?
It's a loaded question, difficult one to answer for the simple reason that I don't think that I or many people looking on the outside in know about the full intent as well as the details of that fintech charter and how it will come to be lived and incarnate. So I can answer in grand theoretical ways, but I would hesitate to say this is a bad thing or this is a good thing, not knowing exactly what the roadmap for the OCC is. Mm-hmm. Having said that, you'll appreciate this, I'm sure. It is a fact to say that there are many different fintech business models. Again, the 5 ecosystems within the industry: lending, capital markets, asset management, insurance, and payments have each have like a multitude of smaller subsectors within themselves, and that's reflected in the myriads of different business models that fintech companies and fintech entrepreneurs have created over the past 5 to 6 years. So, in as much as that fintech charter is really a bank-like and bank-light charter that tries to help business models that are very close to that of a bank, i.e. intermediating between a borrower and a lender, then I think it may make sense. And as much as it is a fintech charter that would go over and above that intent and try to be a one-size-fits-all for all types of different business models, then I scratch my head and I'm like, maybe I'm missing something, and maybe I need to be better educated in what the OCC's intent is. I'll also answer by repeating myself of what I mentioned earlier, which is there are so many different regulators in the U.S. that you want to avoid either overlap or gaps. And so by slapping a new uniform charter that is dubbed a fintech charter, you have to understand what are the consequences, both intended and unintended, with other existing regulators and existing licenses, and how these are impacted, both at the federal level as well as the state level. What will the California financial regulator or the New York the state financial regulator think about that fintech charter for all the businesses that operate primarily within their confines?
Switching gears, digital identity is a potentially revolutionary space. I mean, especially in a world of API-based interconnected platforms, which I know you're a proponent of. You've written extensively on both. One view says that digital ID programs should be government undertakings. Certainly countries like India, Pakistan, Estonia have taken that view. But we haven't seen anything tangible yet in places like the US and the UK. What might digital identity look like when it's finally cracked? Will it be a public or private endeavor, I don't know, blockchain-based? Will it be owned by a single trusted intermediary or distributed? What do you think?
Yeah, I think the glib answer is all of the above, in as much as identities are, there is a certain plasticity to identity, right? And even more so to digital identities. And identities are so much rooted in experience, use cases in real life, as well as, the social bonds that a particular community forms, whether in real life or digitally. So I don't expect a one-size-fits-all. I expect all kinds of different approaches, both in terms of the meta approach as well as the tactical approaches, i.e. which type of technologies. So from that perspective, the Pakistan approach is different than the Indian approach, even though they're government-led. One is centralized, the other one is decentralized. The Nordics, i.e. Sweden, Denmark, Norway, and also to a certain extent some Baltic countries have a mandated government approach, but that folds in the private sector and banks that are empowered and enabled to create digital identities. And these approaches are rooted in the culture of each of the countries, what people are used to, what the government has within its remit, without a violation of any type of privacy or private sensitivities from citizens, i.e. we have a national identity system already. We have a national ID identifier already in place from the point of your birth to the point of your death, right? And so that enables either government-led or hybrid-led paradigms much easierly, because you have an anchoring point that is at the ready, that is the citizenry is not going to rebel against. When it comes to the UK or the United States, that for a lot of historical reasons, that's not necessarily the case. So it's much easier to do so in France or in India or in Pakistan. It's much more difficult to do so in the US. And one would say that it might be a competitive disadvantage at the very beginning for the US to not be able to easily come up with some type of government nudge or government fiat, you industry shall do this off of this particular ID system. If we remain at a point where the government doesn't, the US government, and I'm talking about the US federal government, doesn't take some type of initiative to facilitate what the private sector is clamoring for, which is, number one, let's have standards. Number two, let's make sure that we're not running afoul of any type of legislative agenda. And number three, help us along the path on both of these vectors so that we come up with some private solutions. I think that's what's most likely going to be the case in the U.S. The government getting out of the way while at the same time doing some nudges. There are certainly some agencies. NIST, for example, out of DC, that is doing a tremendous amount of work around standards and identities and digital identities. And I expect this to continue up to a point where these standards are fairly clear, and then you're able to have private sector, taking up the mantle. The other part that I think is very important in the U.S. is tort and liability and the stigma associated with personal data and hacking of said personal data and so on and so forth. So there is a lot of investments that has poured into security and cybersecurity, in authentication and in authorization to make everything secure. One could push back and say with little effect because hacking is happening more and more. At the same time, privacy concerns are extremely important. So you have pushback from the private sector in terms of don't tread on my privacy. So we have a field where you have like various very important stakeholders that need to see eye to eye in order to facilitate some new digital ID frameworks. And it might be that, as is usually the case, you might have one or two breakthroughs from the government on standards, and then startups taking on the mantle. And the next Facebook or the next Google might be on the digital identity side, or Facebook or Google might come up with some nifty way of federating digital identities to make our lives easier. Or, and that's the last piece I think is the most fascinating, someone within the realm of the payment industry, some of the payment networks I'm thinking of, might realize that you can't have identity without trust. Trust and identity reaffirm themselves. And once you have trust and identity, that usually facilitates either new forms of payments, new forms of payment rails, and or new types of currencies between the people that have a certain level of trust among themselves. And so, digital identities might very well come from the payment world too. To your question with regards to various technologies, I can't begin to answer in an intelligent way this question, other than you'll have multi-factor authentications at the authentication and authorization level. You'll have different types of technologies in a portfolio approach that will help with digital identities, whether it's crypto to encrypt certain signatures and provide tokens, or whether you have different types of biometrics and so on and so forth. I don't think that there's going to be one silver bullet use case application that is so narrow that it's only going to be blockchain or only going to be biometrics. It's such a complex problem set when you talk about identities and digital identities that you're going to have the solution reflecting the complexity and being diverse.
Mm-hmm. I think you made a really interesting point in one of your blog posts about how surprised you were that given the vulnerabilities resulting from the current relatively insecure forms of ID, certainly insecure for online use. Surprised that governments, companies, and consumers weren't all being more aggressive in their demands for a new solution. I mean, it really is crazy when you think about the amount of fraud, theft, data loss as a result of a kind of a non-ideal ID solution for a digital age, that this isn't getting more push, potentially, as you say, at the government level.
Yeah, it is indeed surprising. So we consumers, we don't like friction when we use solutions online, whether it's a payment solution, whether it's a social media. We like ease of use, and that ease of use goes against perfect or best or more security, right? More security means more friction, means that we're going to spend more time authenticating ourselves, protecting this and that. And so that there's a natural tension there at the consumer level. Then there's a natural tension at the enterprise level, whereby everyone wants to monetize our data, but no one really wants to be associated with the risks and the tail liabilities that entails, right? So a Facebook, any bank or an insurance company will, their future is to better understand us, and hence they need to better understand the data that we create, either directly or indirectly, and to monetize that data. But lo and behold, last I checked, I didn't see a clear-cut view on who owns that data. Do we own that data? Do enterprises own that data? And that's kind of like a hot potato, right? Certainly, the private sector is not very much interested in being told that they own that data, because if they own that data, then they have a liability, and they have to make sure that they secure it properly and they record it on their balance sheet. If we own our data, then we have to give consent on everything, and the private sector probably is not going to like that because they're going to be hampered by with their monetization efforts. And I think it's a tug of war that is going to play out in one way or another, where there's going to be more clarity in terms of who really owns the data, who views the data as an asset, who views the data as a liability, how it is recorded, and then how it is protected. Certainly bank data and payment data is probably a little more secure than social media data, but at the same time, hacks happen with retailers and e-commerce and so on and so forth. I'll expect both a lot more investment on the security and cybersecurity side over the next coming years, and then a slow ramp on digital identity solutions to match that cybersecurity. Because in and of itself, anything that is at the authentication and authorization layer is not going to be sufficient. And then once we have clarity on, who indeed, quote unquote, owns that data and who is liable and responsible, then I think that from an economic point of view, we'll have clarity on, why do we have all these hacks continuing to happen, and what can be done to stop that at that scale that it's going on. I have one of my pipe dreams, if I may use that word, is for a bank, in as much as a bank protects, secures, and holds my money, to have a bank protect, secure, and manage my data, and realize that their business is as much managing money as it is managing data going forward. I think that's a very powerful model. Probably doesn't jive much, or doesn't jive well with more cypherpunk libertarian enthusiasts that may recoil in horror, thinking that a large organization would hold that data. And there probably will be other solutions where, you're much more empowered with self-sovereign digital identities that hold your data, and you have that private key that holds that account, and you're able to manage it. That certainly can happen too. That's kind of like the other extreme part of that spectrum.
One of the questions that I've always asked myself when it comes to the adoption of new kind of industry standards, in this context, digital identity, but I suppose it extends to things like blockchain as well, especially in use cases like clearing and settlements and international payments, is how do new tools, whether it's digital identity, whether it's blockchain, gain traction and reach scale in industries with entrenched incumbent interests, when there's no direct monetization opportunity for in the instance of blockchain clearing and settlement, startup offering a new service? To an extent, it's not overly surprising to me that we haven't yet seen any of these great blockchain use cases that we were promised a few years ago. I mean, how do you, from where you sit as a venture capitalist, think about some of those real broad-based structural changes to industry?
Obviously, most definitely open standards that allow for interoperability with varying degrees and flavors of solutions is very important. I think that we actually have started seeing that in the blockchain space, and that's very encouraging. I had written about this in 2015, and we definitely saw not only a movement towards open sourcing certain parts of codes and libraries for various service providers and startups and consortiums, but also various entities taking on the mantle of building standards in collaboration with the private sector. I think that's a requirement, and that's going to go from strength to strength, but it takes time. Right? Look at the amount of time and the number of years that the various standards bodies in consortia or on their own had to work on to get to the point of past the early days of the internet. Right? HTTP, TCP, IP. XML. I mean, there's all kinds of different protocols that benefited greatly from a good 2 or 3 years of working bodies working on standards. So we're in the midst of that. I suspect there's going to be another, couple of years in the banking industry. We're starting to see this in the insurance industry too, where there's going to be different types of open standards needed, and that's the prerequisite for meaningful use cases at the top app layer to mushroom. And then innovation is a finicky thing, whereby you're dealing with either innovation with a few stakeholders or a lot, and innovation with a something that is actually not quote unquote too new, or something that is completely new and it's the first time that you've done it. And so on these two vectors, right? If it's something completely new with a lot of stakeholders, that takes a lot of time. I think that the digital identity that might in some way use a blockchain technology is like very new with a lot of different stakeholders, and hence extremely complex. And it's very difficult from an innovation point of view to get it started fairly swiftly. On the opposite end of that spectrum, something that has to do with clearing and settlement of an asset class that is not publicly traded, i.e. syndicated loans, for example, between a finite group of banks on the banking side, or on the insurance side with reinsurance, with the type of reinsurance workflows between a cadre of like 5, 6, 7, or 10 reinsurers around the world, is something that is not necessarily brand new, where there's not that many stakeholders, and so the complexity is much less. So I would expect that over the next 2 years, we will see live use cases of blockchain technology, if we're talking specifically about the blockchain, right? Supported by some open source, some standards that are being built, and where there's not too much complexity, and where you're basically upgrading a certain operational workflow. And that will surprise many people when that will happen, because you'll go, oh my gosh, it happened quite fast, even though there was some legwork for like 2 or 3 years. Now, the more complex stuff, might not be happening within the industry because it takes a long time. It might be like a brand new startup that comes up with something absolutely fantastic, and we have not seen that yet, but we may over the next couple of years. Who knows? That's what makes it fascinating.
Mm-hmm. I know you're also interested in micropayments. That seems easier to implement now that we have alternative rails to banks, namely cryptocurrencies. If someone comes to market with a cheap, easy-to-use solution, there's no reason adoption couldn't be quick. Friction would appear to exist, though, when it comes to integrations into existing bank infrastructures. Micropayments, micro-remittances, and micro-insurance could change the game when it comes to financial inclusion. Can you imagine any meaningful near-term developments in this space? Most definitely. I will not be surprised if there are, N+1 micro payment platforms that are blockchain enabled. It might be Ethereum if certain kinks have been ironed out. It might be off of Ripple. I'm agnostic. I'm not sure which platform that would be. Where the core infrastructure and the core rail has been developed by a bank. And so you don't have any integration issues with like a core banking system and a transaction processing at the system. You don't have any issues with AML and KYC either. And where they're open that platform and that ecosystem to a universe of developers that will build particular apps for particular use cases, either to purchase digital content, or to enable machine-to-machine payments and transactions, or machine-to-humans, or human-to-human. I think that's the most likely, and that's the most exciting, frankly, because it allows for both investments in pure startups, i.e. those developers that will build off of a bank-led micropayment platform, as well as meaningful interaction from a large incumbent. That's the most likely, and indeed, recently Santander announced that they had been working and are working on something very similar. If there's one bank, there's going to be more than one. That probably is an easier way to go towards mass adoption, as opposed to having a startup that has come up with,
microtips or micropayments within a closed loop system, because you always get an issue with how to deal with AML KYC, how to deal with customer acquisition, how to your point, integrate with bank systems or traditional rails when you want to fund within that closed loop.
There's a view in some parts of the tech and VC world that we're moving from an app world to a chatbot world. I don't know, regardless of terminology, effectively a world in which we rely on a range of apps for specific needs, i.e. the current world, to one in which we have a single interface, so whether it's text or voice chat, that addresses all our needs. And this move could in part be driven by the evolution of things like Siri or Viv and Amazon Echo and other screenless interfaces. Is this the future you see? And if so, how quickly do you think we'll get there?
Yeah, so you have a tension between broad and shallow applications and deep and narrow ones, right? That is entirely dependent on how fast the technology progresses, i.e., the leaps and bounds of the AI space, and most notably machine learning in general, and deep learning being a subset of that. At the stage that we're in, even though I'm not a specialist in the field, I'm pretty certain that we can't have both. We can't have broad and deep, right? So you can have conversations with Amazon's Alexa, with Siri, with Google Voice, and if it is for certain use cases like e-commerce or some type of automation around the home, for example, then that's going to work. But you're going to get tripped from a conversation point of view when the subject matter requires that you go deep, and we're not there yet. So, is the broad and deep going to happen because Siri and Alexa and Google Voice and IBM Watson, I forgot about IBM Watson, go there first, or are we going to have specialist apps that master subject matter expertise and apply very specifically AI tools to that? I would tend to say I believe more in narrow and deep first, with various siloed app that for example will address several narratives and several conversations within a bank service or within an investment service, and getting really, really good at that. And then these being embedded in the more broad and shallow experience. And in a certain way, that might be what Alexa and the Amazon people behind Alexa are doing, right? With those scales that one can add one after the other. They're all very specific, or should be very specific, other than just like the pure branding. In the absence of any constraints from a technology point of view, then the human experience would be much better if you had like only one app that answered to everything. But I think it's going to take quite a while before getting there.
Looking at AI more broadly, I guess, and the implications across industries and business models, there's a lot of talk about a potential job displacement as a result of the advent of AI and robotic automation. Initially, potentially more blue-collar jobs. Over time, potentially more white-collar jobs. We've seen some recent, very glaring examples of kind of a move toward more populist sentiments in the developed world. Certainly, the Western world, things like Brexit and the Trump election. Which appear closely linked to the disenfranchisement of large swaths of the population. The same sort of disenfranchisement that over the short to medium term, at least, we could expect post AI driven work displacement. Do you have feelings about the some of the I guess kind of the higher level socio-political trends that real meaningful push toward AI could start to spark?
Yeah, it certainly could be a backlash with regards to technology as a whole, and I think that the end of 2016 has seen that backlash, right? And what I mean is there's been fake news, and there's been technology is displacing us and AI and the dark side of AI and so on and so forth. And all of a sudden, technology companies are not as in favor and viewed with a positive outlook. So there's certainly the potential for further of that if we don't use technology in the right way. And when it comes to AI, my view is, use it to augment human beings as opposed to replace them. Mm-hmm. Even though, and that's a comment that I would make in the aggregate for any economy in any nation, right, or any industry. Even though when you go one step, below the aggregate, granularly for various use cases or various businesses, you will have displacement. It's bound to be that we do again more with less. That's what innovation and applying technology means. And there are certain low-level tasks in the financial services industry, to take that example, that will be automated with either robotics and or artificial intelligence. And as long as the governance is done in a way that economists as well as business leaders pay more attention to the dislocation, and that process is managed in a different way than it has in the past, I think that's a positive. If it's more of the same and disruption or dislocation rather of human beings in the labor force is an afterthought and an externality that is not taken into account, then there'll be a backlash. At the same time, shutting any type of technology advancement just because we don't want any type of dislocation, right? That will lead also to some different, but also some negative consequences.
Yeah. No, I think it's definitely the right formula. It's adopt where meaningful impact can be achieved and do so in a responsible way. You've been an entrepreneur and you've met many more in your years as a VC. What, in your experience, sets successful companies apart from failures?
If I had the perfect scientific answer to that, I would be a very rich man, right? So, there's probably different types of answers that are, some contextual and some hold a fount of truth that can be applied through every time and period. But you have to have a set of entrepreneurs and people that are open to, what the market tells them, and open to experience as well as A/B testing, as well as pivoting when they need to pivot, while at the same time having a grounded view of what they want to achieve. So neither being obtuse nor being open to everything, but have that right balance. And then learning from your failures, as some of the great entrepreneurs of late have said, from Bezos to Zuckerberg and other great venture investors. You have to fail often, but you have to fail fast, and you have to learn not only in the first order but also the second order. From that I mean you have to learn off of your failures, off of what it does to you yourself. That's the first order, and recalibrate. And then the second order, which is how it impacts others through your own actions, as well as how they themselves react. And if you approach this and go from strength to strength, so that the learnings from these failures are not moot and not put to productive use, then you increase over time your chance for success. And I think that you have to approach this as a time series of decisions, whereby the more you learn, the more you act, the more you succeed in small successes, and the more you fail in small failures, builds upon itself, where there's a point at which you build something very, very resilient, and then you hit a high note and you succeed. I believe much more in these types of successes, because they're the ones that will last over time, as opposed to you've won the lottery. And so winning the lottery can be genetics, and it's at birth, and you're a multi-billionaire because you're the best sportsman or the best singer or the best model. But it could be the lottery for business. And you were at the right time, right moment, right luck, and you're a multi-billionaire because you started this business and it just took off. But you won't be able to repeat that consistently the second, third, fourth, fifth time around. And there are very few people that do that. And those that do that are the ones that go through that process of building resilience through small successes and failures over time.
What's the best way for people to find out more about your work and connect with you directly?
I easily found and reached on Twitter, and that's one of the best ways to interact with me. You can also find me through my blog, finiculture.com, as well as on LinkedIn. I post regularly my thoughts in long form with articles and blog posts, as well as in short term on Twitter. And whether you want to brainstorm, share ideas, or alert me to some interesting investment opportunity, that's the best way to do so.
Well, your writing is phenomenal and certainly one of the best sources of fintech and investing insight out there. Thank you very much for all the work you do there.
Thank you. Very kind words. I'll accept them.
Pascal Bouvier, thank you very much for joining us today.
Will, thank you very much for having me. It was a pleasure.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.